Axis Bank, but Jay Bala of Cash to Chaos joins us on the show. Jay, you have been saying that this market actually, wow, that's a nice shirt, Jay, nice and pink. All right. So Jay, the markets, you have been telling us that it actually eventually is going to be testing those higher levels till I think 24,000, 24,300 is the level that should be protected on the downside. You're as bullish?
That's right, Nigel. I'm bullish from a medium-term perspective, but in the short term, the markets are coming to headwinds. Like I pointed out last week, the global macros are likely to put pressure, and we saw the US markets cave in on Friday. I think that is the beginning of a short-term correction for the US markets. From where the US markets closed on yesterday, the 30th of October, I see a further drop to about 6 to 10%. So that can put short-term pressure on the equity markets, and that's the minimum I'm anticipating. I think the markets should hold off at the minimums, and I'm bullish for the rest of the term for markets heading into 2026.
Okay, bullish, for some more time now. Globally, is there a risk that, say, the US markets run out of steam? Everyone's questioning whether this entire AI theme is in a bubble. There have been a circularity of deals in the data center. Too much money has been committed. Look at OpenAI, $1 trillion in terms of, spend, in terms of deals that they've signed for a company which is perhaps going to generate $20 billion in terms of top line. So since you look at the, global technical indicators also, what's the mother market going to do?
That's right, Rima. The bubbles can last much longer than people anticipate. And right now, with the evidence from the charts, I believe this so-called bubble can last at least till middle of 2026. So what we could see as headwinds will probably be just an interruption in the bull market. And we are likely to see, like I said earlier, the US markets drop somewhere about 6 to 10% from yesterday's close. And all three major indices, and even the AI housing stocks index, that's also pointing to a similar picture. So I believe for the bubble to pop, a little more time is left, at least a couple of quarters in my opinion. So I will still remain bullish because there are sizable gains to be made on the long side. So the Nifty, in relation to the global structure, it might just either meander between 25,500 to 23,000, or the short-term trend line. If you draw a trend line from the all-time high of 26,277, that falls through exactly at the September high, and last week's high of very very close to that September high. Nifty can manage to take out this high of September. I think the Nifty might outperform the global markets, but that's not my base case. I'm a bit cautious. I'm anticipating some pullback to come through in line with the global equities. I want people to book profits that they've made in the last few months and then reduce positions. Not go to 100% cash. You can still be somewhere between 50 to 75% long.
And what about gold? We saw a decline in some of the metal prices today, including gold. Do you believe that it's just a correction in an otherwise uptrend, or maybe it's topped out?
Not yet topped out, but it's starting to look parabolic. So that's a danger sign. And if you look at the monthly RSI for gold, it's at 91, and it's sort of unprecedented levels. And the most important thing is we don't want prices to go parabolic. We've seen 20% rise in the last 2 months, and that's a danger sign. It needs some cool off, and I'm anticipating some cool off to come through. Right now, there is no reversal signature. So you need to keep trailing stops for London gold at 4,000 odds and London silver at 49 odds.
All right, Jay, thank you for joining in. Just stick with us. We'll take a short break, come back, discuss more. Well, we are still in conversation with Jay Bala of Cash to Chaos. Jay, as always, it's a stock-specific market. What do you have for us today? Give us 2 picks.
Yeah. See, before I give 2 picks, Nigel, I just want to make it clear that the markets are possibly late stage of this short-term cycle. So you might want to book profits and take that profits and try to put in these 2 new positions. That way you can position size accordingly, and your position size will be small in that sense. So from that point, I have Tata Communications. It's looking quite interesting from a short-term perspective. a stop loss of 1745 for an objective of 2100, possibly fresh 52-week highs and new all-time high. And the other stock I have is JK Cements. This is also looking strong within the cement space. Stop loss at 6202 with an objective of 7735.
All right, Tata Communications and JK Cement, your two stock calls. Jay, thank you so much for